The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your hosts, Mark Longo from theoptionsinsider.com, Mark Sebastian from optionpit.com, Mike Tusaw from knowYourOptionsInc.com, and John Griegas from Options Express.
Welcome back to the Option Block, and I hope all of our listeners had an exciting weekend. I'm sure all of our panelists did as well. I, of course, am your host, Mark Longo, your host for this hour of chattering silliness about the option market. I'm joined, as always, by Uncle Mike Tusaw from Know Your Options, Inc. Uncle Mike, how are you doing today?
Great day to be alive. Couldn't be better.
Great day to be alive. Well, I like your optimism, Uncle Mike, as always. And then joining me on the other side of the mic, as it were, is John Griegas, filling the rotating Options Express chair today. John, how are you doing today? How was your weekend?
It was good. I'm a little tired, I should say, from the games last night. A little sad, a little frustrated at Jay Cutler, but you know what? Opening season for the White Sox starts soon enough, so I'll just start focusing on that.
Yeah, what's his name? Who was that guy who Boughton or who caught that ball for the Cubs? I think Cutler might be replacing him in persona non grata status in Chicago right now.
Yeah, what happened to him? Was there a play that I missed that he hurt his knee? I must have missed that. I'll have to go back and watch it on TiVo.
He hurt his knee in the second quarter. He tried to play on it. He aggravated it. He wasn't able to throw properly, and he has been getting a hatchet job by everyone in the media, in my opinion. And
I agree.
I mean, it's ridiculous. It makes me happy that I'm not a Chicago Bear fan with the way he's being treated, from the fact that Chicago wanted to blame the entire Super Bowl season on Rex Grossman. If it wasn't for Rex Grossman, Chicago would have won the Super Bowl. He was just so awful. Now Chicago wants to blame Jay Cutler, and it's sad what the Bears are doing.
Yeah, no, I agree with you. I think that, you were much better off. Now, here's what I will blame the Bears for, is that waste of a space that they had as a second-string quarterback. But if Cutler's knee is bothering him that much, he's going to do a lot more damage than good, and that's all the Bears need. And I'm guessing that the Bears shut him down, just knowing him. I mean, you're down 14 points. Your quarterback that you've invested in your entire future has a knee injury that you don't know anything about. I don't know if you guys have seen, but knee injuries and throwing are not a good combo, okay? And at least those to throw properly. And, it's just – I think that's all they needed to do was not only lose the game but permanently injure this guy they have millions of dollars invested in Jay Cutler. And, I think that, they'll be back next year, so I'm feeling good. I'm feeling good about this team. In the 7 games they end up playing next year, I am sure that they will do well.
Well, and on top of that, the two toughest guys on that team, Brian Urlacher and Olin Kreutz, are standing up for Jay Cutler. So, I mean, if you don't need anything else, you shouldn't need anything more than that. And so,
I agree.
Shame on any Bear fan that's questioning Jay Cutler's toughness.
Yeah, now, what did you think about – I do have to admit, though, I was really impressed. What did you think of Caleb Haney when you saw him passing, Mike? I mean, you're the football guy.
Oh, I think I thought it's a great opportunity for him, and that's how he might be the next Kurt Warner. Who knows? Out of nowhere.
Yeah, I mean, for a guy that's played a total of 9 snaps to come in and do that and play, as well as Cutler, I think was pretty impressive. So
yeah, he did great.
Chicago has never been known for loving its QBs. It's always been a running game town, and I guess when the QBs fail to perform as they always do, they usually get held out to dry. And I'm not sure if I introduced you, Mark, but I'll introduce our next cohort here on Sports Talk AM 1080 is Mark Sebastian, the greasy meatball himself from OptionPit.com. And Mark, I guess we can tell how things are going with you. And
things. I'm crying myself. You know, if only my 80s references could take me back to 1985, I'd be a much happier person.
Bring on Jimmy Mack. He would
bring on Atlanta. Bring on Dallas. This is for Mike and Papa Bear Hallis. That's all I got to say.
I was actually living in New England and a diehard Pats fan in 1985. So 1985 is always a dark day for me.
What did we beat you? 27-0 that year in the play?
It was way worse.
48-10, wasn't it?
Oh, 48-10. That's right. Yeah, 48-10.
Even Fridge scored a touchdown, for God's sakes.
You who didn't, Walter Payton. Such a tragedy.
Every Chicagoan still brings it up whenever we talk about that game. Peyton never scored. It's like they were slapped in the face personally. Talk about running game town. All right, and with that bit of sports talk, we're going to dive right into the trading block.
The trading block.
And welcome to the Trading Block. This is the section of the show where we discuss what's catching our eye and what's moving the markets today in today's session. And the markets closed another bullish day. The bulls are off to the races again. S&P closed at 1290.84, up 7.5. Dow closed 11,980, up 108.68 points. At NASDAQ closed up 28 points at 2717, and the VIX cash closed down 0.81 to 1766. So, yeah, we're flirting with 12,000 on the Dow, flirting with 1,300 on the S&P. It's just a day to be a bull. This is the time to be a bull these days. What are you guys thinking about what we're seeing today?
Tech. It's obviously a tech-driven rally today. If you look at a lot of the other sectors throughout the marketplace, I'm just kind of bringing them up right now. It's with tech comprising close to a fourth of the S&P 500. Tech's up 1.5%. And I'm looking at the XL ETFs. XLB is up 1%, and that's a very small portion of the S&P 500. And the industrials are up 0.86%, but for the most part, the only one that's up over 1% today is the tech sector, and tech is where it's at today for sure.
Yeah, we should mention to our readers that Intel announced today that they are raising their dividend. They're also buying back some stock. So that was kind of a 1-2 punch to give the tech sector a shot in its arm. It was also a personal tip of the hat to Mike Tusaw to increase the value of his Cisco holdings.
Couldn't agree more.
But yeah, tech was kind of the big mover of the markets today. We also saw some other activity. I don't know if you can call Radio Shack tech. I don't know what the hell you can call them these days, but they announced some disappointing numbers, and their CEO is stepping down as a result. No surprise. I don't think anyone really knows what the direction for Radio Shack or the Shack is these days. And Sebastian, I know you love retail, and JCPenney closing a bunch of underperforming stores. So I threw that one in there because I knew that would probably.
Well, as long as it's not the one at Yorktown, I'll be plenty happy. Yeah, you know, JCPenney, they were a really kind of happy story, but you know, let's just put it this way: JCPenney, better than Sears, worse than Target. So, you know, they're kind of a Kohl's-esque kind of store, but maybe not doing quite as good of a job as Kohl's. So, you know, it's real interesting.
Yeah, I don't know where JCPenney falls on the spectrum anymore. You know, if you want to buy, I don't know, a tool or a major appliance, you probably go to Sears. If you want to buy clothes, you probably go somewhere else. Maybe you go to JCPenney. I don't know. I don't know.
Yeah, I kind of agree with Mark there. I think JCPenney's has turned themselves into a Kohl's wannabe with their 100%, 85% off their clothes. You know, they're marked up to like $100. I mean, they opened up a standalone JCPenney out in south suburbs by my house. And it's a lot different than the JCPenney's that was on the end of a mall that I remember growing up. It seems like they around and look at their stock price. It looks like the stock price has done quite well as well.
So you're a fan of the new JCPenney then, John?
I am. You know, Tucson, I don't mean to step on your toes, but it's a little bit better than the Dollar General. In case you might want to.
Oh, come on now.
I'll never let that one die. No, but I mean, it's clean. It's somewhat newer looking, and I literally think they took their new sales and marketing approach directly from the playbook of Kohl's with the, if you can find something that is not on sale in Kohl's or JCPenney's, I will buy it for you because it does not exist. Everything is 50% off. I can't tell my wife. My wife's like, I've got to get to Kohl's this weekend. They're having a huge sale. I'm like, there is always a sale. That's it. That's all they do.
It's like those rug manufacturers that are always going out of business. Buy one now before we go out of business. So, John, is it safe to say then that you can say that, or we can say that you're seeing the softer side of JCPenney's these days?
You could say that.
And Tusa, I'm looking here at your commodities. Not a good day for silver. Silver well below that 28 threshold we've been talking about a little bit. So why don't you guys give us a bit of a rundown on the commodity side today?
Yeah, it's to kind of continue on I sound like a broken record here again. I think it's just in a continued correction or pullback, whatever you want to call it. What we did last week is we were short the January 25 puts, and so coming into the new month, basically what we're doing is we're trying to ride silver back down by selling out of the money puts on it, and at some point we're going to get caught, we think, but right now we're short the February 24 puts, so it's one where I wouldn't feel comfortable getting into the marketplace right now in commodities, but I think that if you sell puts far enough away, then our plan upon getting it put to us is to reinitiate some type of a hedge, and we have a couple of ideas, but obviously we won't know exactly what we're going to do until it comes. So I think we're definitely in a correction in the commodity world, especially in silver. Gold, another situation like that. We're hedged at this point, and we were in the 132 January gold puts as the downside of our collar last month. And so we sold that section of it for a profit. Obviously, we were down overall in the month. And right now what we're doing for this coming month is our intentions are to use what we refer to as a knockout collar for gold, meaning we're going to use the 130, 126 bear put spread for February, and then we should be selling a covered call in the next few days to finish out the collar side of it. So no question, commodities are pulling back. So now's the time with which you have to be very careful if you want long-term commodity exposure.
So this is another good advertisement for why you probably should have been considering collars all along on some of these names. I know over the course of last year, it must have been a hard sell to any of your customers. Hey, you want a collar gold, you want a collar silver. They must have told you were crazy, this one upside. But these days, I imagine it's a little bit different conversation.
It is. The market giveth and the market taketh away, and ultimately how you're measured in the investment world is how did you compete against your index. And overall, we've captured probably to the upside, and every client's different. Some people it was much more, some people it was much less. Obviously, it depends on when people got in, but for a lot of the gold rally, for example, we captured close to 60 to 70% of the upside, even with the collars. And we're very happy with that. And now is when we'll catch up to the index a little bit more when it comes back, when the puts are in place. Now, ultimately, I want to continue to go. I'd be perfectly happy if it continued to go straight up and I'm capturing 60 to 70% of the upside. But when it pulls back, you got to be ready for it, and that's when we go to work.
That's when you earn the big bucks, as they say.
Mm-hmm. Yeah, everybody's brilliant in the bull market. What was the saying? Don't confuse a bull market with being smart. Somebody said that recently, and I tend to agree with that. You'd be shocked the number of people are like, oh, I'm so smart, and then as soon as the market turns around and they lose their shirt, they're wondering what happened.
With that pearl of wisdom, we will close out the old trading block and roll right into the odd block.
The Odd Block.
And welcome to the Odd Block. This is the section of the show where we discuss the options activity that is lighting up the tape for us today. And we're going to kick things off with Kodak. Good old Eastman Kodak, ticker symbol A. They closed at $5.22, up 7 cents. This is the name that usually does about 8,000 contracts a day. Today they did over 18,000. The primary motivator for most of this activity is the earnings are coming out ahead of the open on Wednesday morning. And you might be surprised to see that the bulls are out in force for Kodak. I know Kodak has traditionally vacillated quite a bit, and obviously the end of the film market and their dominance of printed film really hit the firm pretty hard. But the bulls are thinking that it's going to look pretty good. And actually, there's been an extended amount of bullish open interest going on in Kodak. So right now on the Feb 5 strike, there's about 12,000 contracts of open interest. The bulk of those were purchased on Friday, those Feb 5 calls, for 55 cents a piece. So those are pretty much in-the-money calls now. And we also saw about 1,500 more of those going up today for about 53 cents a piece. So a substantial amount of bullish open interest going up on just the Feb 5 strike. We also saw a little bit more optimistic players coming in today. We saw about 1,600 of the Feb 6s going up for about 14 cents. So overall, the predominance of the paper has been bullish in Kodak. And this is the name, I used to watch back in the day. Haven't watched them recently. It's a $5 stock, so it'll be interesting to see how the earnings come to bear. But obviously some people are putting some size money down that Kodak may be back, at least for the near term. I think some of their camera lines have been doing fairly well these days, and I didn't pay attention to what they announced at CES. Maybe they announced some interesting new cameras. But they seem to have weathered the transition better than you might have expected from the days when they were a 95% monopoly of the film market to having to share that space with Canon and everybody else now in the digital market. But any of you guys play or follow Kodak at all?
Well, not a ton. But you're right that they have kind of, it took them a lot of work to make this transition. It was a huge transition for them. And, there were a lot of people who were betting that they might not be able to do it. But what they've managed to do is convert their film process, their actual film into their kind of digital photo processing and all the little things that you can do with digital film into kind of the physical. And that's been one of their big things, along with some of their camera technology. But they've been really, really impressive. I have to give them credit that they're in business.
Yeah, exactly. That they still exist to this day.
Yes. Exactly.
As this name was coming across the tape today, I was perusing some of the open interest and some of the time and sales going up today, and I can't say I would be a big fan of diving into these Feb 5s now. They've been kind of bid up quite a bit. Yeah, if you're still bullish, there are a lot of ways you can.
What about a put sale, man? What about a put sale?
You could, of course, hit those puts. They're looking pretty ripe at 33 cents right now. Or you can do a half-price risk reversal and say, instead of going full up with buying the Feb 6s, just hit the Feb 5 puts, buy the Feb 6 calls. You get like a nice 17 cents credit, and you protect yourself, and you're not just taking a flyer on the Feb 6s. There are a lot of different ways I would go, but I don't think I would leg into I don't think I would outright buy the 5s or 5 halves. Maybe you like that spread for 22 cents, the 5 half spread. I'm not a huge fan. Yeah, there's a lot of different ways you can go besides piling in to be the next guy on the 12,000 lot going up.
Right, exactly.
So, yeah, that's going to do it for Eastman. We saw an interesting name that we really haven't discussed much on the show. It's a $5 stock, so it doesn't really light up the most actives very often, but an interesting name to be aware of nonetheless. All right, and then we're going to move on to VMware. They closed at $87.73, so they took a bit of a hit towards the end of the day, looks like. I was watching them earlier. They were trading around 89. So they closed down almost $3, down 3.5%, about 3.2%. And if you're not familiar with these guys, they make virtualization and infrastructure software. So they make a lot of these software that you could run, parallel versions of Windows on Mac and vice versa and that sort of thing. And they're another one where they have their Q4 results coming up fairly soon. This is the name that does about 7,300 contracts a day. They did over 40,000 today. And it looks like the bulk of that, or a good chunk of that anyway, was in the March 80-90 put spread. Saw a bearish player coming in and picking up that put spread for $4 exactly, 6,300 times. So that's 12,600 contracts total of that 40,000 was in this put spread. Not surprising, that spread and a few other big trades really pushed the volume up to about well over 6 times or almost 6 times the average daily volume. We saw puts moving ahead of calls primarily because of this spread. It was a 3-to-1 put-to-call ratio on this one. So bears are tending to dominate the VMware. They're announcing actually, looks
right
like
now,
today after the close. Yeah, it looks like it's coming out today after the close. So we'll be able to keep an eye on this one. This is not a name that I follow very much. I was surprised at the valuation on this one, considering they are.
When I was on the floor, I traded this sucker, and the amount of short interest in this stock was phenomenal. There were so many people that were out there just selling it, and I think there's a lot of people who still kind of see this thing as maybe a little overvalued. Wouldn't surprise me at all. And if you remember, since they're in the cloud computing, I think we saw another cloud dealer really come out with some kind of disappointing news. So it wouldn't shock me if VMware kind of did the same thing.
I didn't realize VMware had been trading for that long. I thought it was a more recent development.
No, it's a spinoff of EMC.
Oh.
So it was with EMC, and then they spun it off back, I want to say in...
I thought they IPO'd like a year and a half ago, right?
No. Probably like 4 years ago they IPO'd. It just feels that way because as you get old, time seems to move quicker.
You're absolutely right. Hey, they did came in line with 46 cents, it looks like, though. So
okay.
They topped revenue estimates, so they are actually trading slightly higher in the aftermarket, trading, what does it look like, about 35 to 40 cents higher in the post-market.
One of the best days I ever had was in the stock because I was short a ton of stock. They had earnings coming out. I got bought in on a massive amount of stock, and after the bell, the stock was up like $7.
Wow.
It was like the best thing that ever happened to me.
Were you initially pissed off that you got bought in? Were you like, I can't believe this? I'm short. This is the day it's going to make the move.
Yeah, I sold a few thousand into it, and then kind of made a bet that I was going to get bought in, and then I got bought in way more than I was planning, and yeah, I was annoyed, and then I looked at what it was doing, and I was like, oh, looks like I got some stock to sell. Woo!
That just shows the capricious nature of options trading sometimes.
Mm-hmm.
That's probably why you named your son Buy-In, right?
That's his middle name. His middle name is Buy-In, Mark Buy-In Sebastian. So.
Yeah, this one's looking a little stronger in the after hours. An interesting name. I'm with you. I'm surprised at the valuation on this one. Yeah, looking a little stronger. We'll have to keep an eye on it throughout the show, and we'll come back to you with more breaking news on VMW. We're going to close it out with a weird one, but kind of a fun one. This is Conseco Inc., CNO, and they closed at $6.71, up 24 cents. This is the name that does about 2,000 contracts a day. Today they did 70,000.
Wow.
And what lit this up when I was perusing through to see what this activity was, it was a little confusing at first. A sizable trade went up on the SEP7 strike. And it looks like at first that it was a straddle, but then you look at it again, you realize, wait a minute, this guy actually sold the SEP7 combo, I believe it was 33,000 times. He collected a 23-cent credit, so he bought the call, sold the put. So he ended up pretty much legging into 3.3 million shares of the stock for $6.77. This is a name that does an average float of 1.5 million a day. So this guy obviously wanted to get seriously long and knew he couldn't do it in the underlying, and so he decided to put up a ridiculously sizable combo. And surprisingly, he got it down at a fairly decent price, not too far away from the market price of the stock. And it just kind of goes to show the liquidity that can be found in the options a few ticks beyond the NBBO, even on a relatively illiquid name like CNO that doesn't really do any volume. So I thought it was an interesting one to close this out with. I don't expect any of you guys have anything to add on CNO.
Jose Canseco played in the 80s, so I figured.
Yeah, Conseco Inc. Yeah, I look at this one. It gets some really weird volume where there's like one guy that likes to play this thing, and that's about it. Yeah, there's a lot of stocks. Most people don't realize this, but if you look at a lot of the smaller stocks, there'll be one or two people that one or two funds that owns a huge portion of, some of these individual names. That certainly could be this guy. That's just the way it is. So.
Yeah, we always talk about using options to find liquidity and using options as stock replacement, and this is a quite literal example of that. And a sizable one in a small name. I mean, you might see large size combos going up in SPX and some of the large indexes, but to see this size of a combo going up in a small illiquid equity, it's rather unusual. And I thought it was worth at least noting. This guy's got a sizable position on now in CNO, so make of that what you will. But an interesting trade nonetheless. And that's going to close us out for the old odd block today. And with that, we will move right into the Express/spread block.
The Spread Block, brought to you by Options Express. Options Express lets you trade futures and now foreign futures too, where and when you want. From advanced charting and free daily trading ideas to automated systems trading and free educational resources, Options Express is the online broker for all traders. Visit optionsexpress.com to open your free account. Futures involve substantial risk and are not appropriate for all investors. Please read this disclosure statement for futures and options available at optionsexpress.com/futures risk or by calling 1-888-280-8020 prior to applying for an account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the old Express/spread block. This is where we sit back and we listen to the tales of wonder and merriment that are going on behind the scenes over at Options Express land. And today we're going to listen to John Griegas tell us all about what's going on in Options Express. But before we do that, I do want to congratulate you and your team, sir, because you were the winners of our Options Insider Broker of the Year award last week. And
oh, wow.
That did come from our readers. It wasn't just our staff sitting around saying, we like these OX guys.
Yeah,
wow, that's impressive.
Mark Longo and the listeners, obviously it's a big acknowledgement, and we were happy to that. David Fisher, CEO, actually came over and said something as well to myself, Tim, and a couple of the other guys that work on the show here, Josh. But we do appreciate it, and thank you goes out to all the listeners who voted for us. To keep on that line of thought, I was going to toot my horn a little bit. This week's a big week here at Options Express for our workers and our customers. It is our 10-year anniversary. Not 10 years since we've been public, but since the inception of the company. We also had a good write-up by Kiplinger this week. They do a yearly survey. I think maybe they do it maybe every 2 years, but it came out this year, and we did get 4 stars for website usability. And even a call I had today where I had a customer comparing us to another brokerage firm. I won't be disclosing that other firm, but he did say that, our website is very easy to use. You can go on it and learn it really quickly without having to call in and have instructions or read a PDF file that's so lengthy. And then what he does, and I have used a lot of platforms myself, and for me, it's very simple because I've been in the business for a long time, so I'm able to navigate around. But I don't have to use some of the videos to watch how to put an order, and I can skip over that and go to more like the Black-Scholes model or the implied volatility and pricing calculator. So it was nice to hear through Kiplinger and through some of our customer feedback that they do appreciate the usability and the ease of the website. Also going on this week. A few members of the firm will be ringing the bell on Wednesday at NYSE in New York. So set your DVRs, Sebastian, dust off that Betamax. And,
so John, that'll be you ringing the bell, right? Because you're the big time guy. I want to see you swinging the mallet.
No, the people that actually run it on a day-to-day business, have to be here and keep things moving smoothly. But
tell Fisher to take a back seat for that one. Let you swing the mallet.
So yeah, and you've seen me. They don't want me on camera with my mug. Ooh, jeez. They want people to trade with us, not transfer out their accounts. So they will. We will have a sizable presence on the floor. A lot of people do watch CNBC right on the open to see what the market's going to do. So maybe tune in a few minutes early and take a look at that and see some of the faces of the OX. But it'll be interesting. So that's on Wednesday. They're also going to be on the SIBO on Friday as well, ringing the bell there.
Well, let me tell you, there's nothing more exciting than ringing the bell on the CBOE.
Yeah, I haven't seen it in a while. Do they bring an actual bell to the floor? Or is it just
there's like a little platform that looks like it's made out of, the stuff that your dad used to put like those hooks in so he could hang his tools that had all the little holes in it?
Yeah,
in the basement? Yeah, the pegboard. It literally looks like you're walking on pegboard. And it certainly doesn't feel secure and or look secure. But that is what the CBOE uses for their stuff.
Wow. So they're actually bringing some people from work and some customers. They're putting we get some local customers that come down. They've been here for 8 or so years. They're going to bring them down to the floor, give them a big grand tour of the SIBO and how electronic trading has been divided.
Yeah, if you want to, you could get them. I could take you to I give you anybody. I can close your eyes. I'm going to give you a visualization of this before the CBOE right now. All right, prepare. Now everybody, close their eyes. Now what I want you to imagine is just an empty space. Okay, so there's an empty space. All right. Now you hear nothing. Okay. There's a little dust at your feet. Every so often a tumbleweed goes by, and then every so often beyond that you hear some guy say, "Hey, how are these? I'm looking across." "Okay, thanks." And that's the floor of the CBOE now. It's really exciting.
So I guess
but if you've never seen it before, though, the SPX bit is still pretty good, though.
Yeah, that's true. I'm sorry. The SPX bit is interesting. But aside from that, it's not exactly the most interesting place.
SPX and VIX and maybe the Dow and a few others. There's not much going on. Talk about anticlimactic. My very first day on the floor of the SIBO actually was the day they launched the Dow options. So it was an enormous party. They were blasting Metallica. They had Peyton and Michael Jordan down there ringing bells. It was confetti shooting in. I was like, wow, this is the best place ever to work. I've never seen anything like this. And then it never, ever happened again. that was my introduction to the SIBO, and it went straight downhill from there.
I'm trying to figure out whether the highlight of my option trading career was when Scottie Pippen rang the opening bell at the American Stock Exchange when he was on, I want to say, the Phoenix Suns, or whether when Bill O'Reilly did it. One of those two.
He was on the Phoenix Suns? I mean, was it what? I couldn't get him when he was on
no, he's on the Portland Trailblazers. So that was probably the highlight of my life. Or, you know what? No. The highlight of my life was when Elvira rang the closing bell and they gave her a tour of the floor. So that was the most exciting thing I ever saw.
John, anything else? Anything else going on interesting over in Options Express land this week? I know it's a pretty busy week.
It's day after expiration. It's for January at that. It's usually today and Friday are probably our busiest days of the entire year. And volume is picking up. I can't answer any more questions on when will this market correct, because I've been short for 2 weeks and I'm continually wrong. So if you do get me on the phones, please don't ask me when this market's going to correct. I mean, does anyone else have any ideas? I mean, when I traded for myself, the worst day I would have would be an uptrend market, because I could not mentally get myself to stop selling into new highs. It just drove me absolutely nuts.
Mm-hmm.
This is what it's been like for the last 3 months. So just to figure, expand that intraday trading fault to a 2.5 month streak here. So do well in short gold, but everything else has gone right through my face.
Yeah, but the interesting thing is that the markets are getting near like real highs, but the VIX is the VIX, and with that, a lot of the at the money vols, a lot of the volatilities that I actually look at, they have not kept up with the rise in the marketplace. If you take a look at what vol is doing relative to price, we've had, since the volatility really bottomed out in, I want to say, you could call it maybe, end of December-ish, maybe beginning of January, we've seen vol pretty much stabilize as the market has kind of rallied. I don't know. You guys kind of seeing the same thing that we're rallying, but it seems like one, HV is starting to kind of catch up to realized volatility is starting to creep up to implied volatility, and implied volatility has certainly stopped dropping. Skew, which is kind of how puts look and how calls look relative at the money, has steepened on the downside and has kind of flattened up on the upside. And, this is into a rally. So, 16% volatility when we're trading 1250 versus 17% when we're trading 1290 is, a pretty big increase in implied volatility. I don't know. Are you guys kind of seeing the same thing?
Yeah, I've been leaning on the same side of the fence as John for a while now, and we're not wanting, but waiting to see when this market is going to turn the other way. So we've been eyeing a lot of downside skew in S&P for a while now.
I mean, it has gotten really
firmer.
flat. Yeah,
it had gotten very, very flat. We were looking to put on some downside stuff, and then we noticed it starting to firm up noticeably in recent days. So even though the rally continues, I think the sense of unease may be growing as people are starting to migrate a little more into some of this downside liquidity. And it's not necessarily reflected in what you initially see. You turn on the market today, VIX is down, all these the standard bearers, what people usually use for measuring market sentiment are useless for this stuff. And if you actually dig into the skew and a few other things like that, and this might actually be a time when that new skew index that Sibo is talking about might actually be interesting, and to see how that's doing. I haven't. Yeah,
I'm really interested in how they're going to do something like that. I'd love for them, maybe it's me, but I'd love for them just to kind of post an at the money vol for, and use that as opposed to. The thing I really hate about their VIX calculation is the fact that they are willing to use options that are worth less than $2 in the calculation. I don't get why an option in something as expensive as the S&P 500, an option worth less than $2.50 is not even really an option. It's just a cheap little, that's not volatility. It's just kind of a unit,
Well, yeah, that was part of their big, revamping of the VIX a few years ago to make it more relevant and to take into account skew, but they probably went a little bit too far in the other direction, putting in these worthless puts, which is why we're still seeing those crazy prints on VIX settlement days out in these completely worthless puts.
Well, and they're messing around with it. Yeah, I think they did. They messed around with the skew down there, and the settlement can be manipulated. I mean, I think there's multiple people that are showing how you can manipulate the skew itself. So, that's not an issue. I don't think that's in debate. So.
No, we'll have to bring Henry back on sometime and discuss some of these crazy prints they track out in the downside.
Or Bill would be a real interesting one too,
Yeah. All right, John, anything else going on in Options Express land, or otherwise we'll roll?
No, one thing I did want to mention to Mark, though, is that I heard from the CBO they're going to get rid of the pro rata and the SPX. And I don't know if that was a pilot program that they wanted to try out for 3 months, but it didn't seem like it backfired on them. So.
Really? They're already backpedaling on that, huh?
Yeah.
On the pro rata?
The pro rata of the SPX. They probably shifted it to that electronic-only exchange. They were
trying to. Yeah, they're trying to get all that. They're trying to get the C2 to be all retail. And because the thought was that would get, other things going. But they already backtracked on that.
Yeah, that's, I got a notification. So that's good. It's good. Good for retail. Good for
pretty
retail.
Firm commitment from the CBO there. Yeah, that's they seem for sure to be them planting their feet firmly in the sand. SPX is original, is institutional, and the new C2 is retail, and apparently they're already backpedaling on that, which is interesting.
Yeah, well, as I stated, these maker-takers, if the markets were all maker-taker, I really like the maker-taker concept. I think it makes a lot of sense. But in a world where we've got a kind of flow being paid both ways, the maker side is just horrible for retail investors. And the taker side, and that's kind of one of the real issues. So if the whole market was maker-taker, though, I actually like that a lot better than the other way that it's kind of been done traditionally. Seems a little less bribery paying for liquidity.
Yeah. All right, I think that's going to do it for the old Express/spread block. Again, congratulations to you OX guys, and we will roll right into the old strategy block.
The strategy block.
And welcome to the strategy block. This is the section of the show where Uncle Mike Tusaw drags himself kicking and screaming back down from the mountains where he is busy catching salmon with his bare hands in the streams up there and feeding them to his grizzly friends. And he comes down and he regales us on his option topic du jour. And I believe, Mike, your topic today is pretty much just how to walk in and hit the button, how to buy a call, right? That's pretty much what we're going to talk about today.
Yeah, I want to get back to the basics a little bit today, in that we've talked about some complex stuff, we've talked about some mid-range stuff, and I want to talk about just buying a call option and what we like to look for, the ways with which we like to set things up, and what to be aware of and what you need to look at when buying a call option. With that in mind, oftentimes people make fun of the idea of, oh, I just want XYZ stocks at 50, let's buy the 50 call. Well, why would you ever do that? Because of the fact that you have time decay working against you and you have implied volatility that could hurt you. Why would you ever want to do that? You should always do a spread. Well, not necessarily. I want to talk a little bit about the ways with which you could buy a call. Now, don't get me wrong. I'm not against spreads, or I'm not against or for any strategy. I just kind of like to view all the different option trading techniques as different tools and the ultimate carpenter's toolbox that we have up in the mountains, so to speak. But when we're looking to just buy a call option, for those of you that are newer option traders out here, this is kind of the way with which we look at it. First, we select a strike price. And we actually have a webinar this Sunday night on strike price selection, which we'll talk about in the Around the Block segment. But let's assume that we believe that we think that for this specific strategy that a deep in the money call option is the way to go. Well, we would trade that with the mentality of very similar to how we would trade a stock. We would have a stop loss in place, whether it's with a contingent order, whether it's on the underlying, or whether it's on the option itself. We would have some type of risk management in place, because very seldom, if we're buying a deep in the money call option, do we want that much exposure to the stock price. So if we are going to go with a deep in the money call option, time decay and implied volatility aren't going to be that big of a deal to us, because of the fact that there really isn't going to be a lot of time decay in the deep in the money call, because it's very much intrinsic value, nor will there be a lot of implied volatility risk in the deep in the money call, because of the fact, once again, it's intrinsic value. Now, with that in mind, let's say that we decide to buy an out of the money call option. A lot of the times when we'll buy an out of the money call option, the way with which we like to look at it is along the lines of, this is going to be a trade to where it's either going to make us a lot of money or we're going to lose all of it. We'll manage risk by taking a very small position on it. So that way, if we do lose 100% on this out of the money call option that we're buying, 100% of a very small percent of the overall portfolio isn't that bad of a thing to lose. So oftentimes when we're doing out of the money call options as buyers, we will simply have it to where we're going to do really well on it, or it's not going to work at all. As an example, I had a client that was convinced that a stock was going to go bankrupt a few months back, and we did this with a put option. And I said, well, how confident are you? And there's a lot of uncertainty with his level of confidence. So instead of shorting the stock or buying a deep in the money put, we just took a very small amount of money and bought an out of the money put on it. And he was dead wrong. The company ended up doing okay, but he only risked a small amount of money, and he was able to sleep at night knowing that if the company did go bankrupt, he could be a part of it. Now, finally, the at-the-money call option. If we decide that we want to buy an at-the-money call option, what we do typically is we're in and out pretty quickly. Oftentimes, we'll be out within a couple of days if the stock doesn't start going our way, if it just stays the same, because of the fact that time decay is working against you and you have the potential to have implied volatility work against you. The power of an at-the-money call option is gamma. When you buy an at-the-money call option, oftentimes your delta is going to be around the 50 level. And as the stock starts going your way, your deltas are going to be increasing. The call becomes in the money. You no longer have a 50 delta option, you have a 60 delta option, let's say. It continues to go your way. You now have a 70 delta option. Folks, that's like buying more stock with no extra risk as the stock's going your way. And if that doesn't excite you, then I don't know what will. With that in mind, though, you have to respect the fact that should the stock go against you, you got to get out of it pretty quickly, in our opinion, if you're in an at-the-money call option. Because of the fact that all the wonderful things of the deltas increasing and that type of thing working your way, it works against you just as fast. So if you're going to buy an at-the-money call option, make sure that you're pretty nimble when things either are going against you or just aren't going for you. And that is Two Saws 2 Cents for today.
Well, thank you, Uncle Mike. I'm glad you could take some time away from your busy mountain schedule with all that cleaning of the fish and communing with the grizzlies and whatnot, and come down here to teach us mortal folk more about how to buy and manage a call. So
it's exciting.
Thank you again for that, sir. And with that, we will close out the old strategy block and roll right into Around the Block.
Around the Block.
And welcome to the Around the Block section and of Sports Talk 1080. And listeners, you missed a rousing debate in the interim that will remain unaired. You have to just wonder about. But picture a bunch of Chicago sports fans sitting around debating the game, and you'll get a good feel from it. And now we're already into
Bills. I am not part of the Chicago sports fans.
You're a Bills fan?
Yes.
Well, didn't you play for them?
Yes.
Well, that makes some sense.
Jim Kelly, I don't know.
Don't link me with the Bears fans. I am a former Bear fan because I grew up in the Chicago area. I am pledged my allegiance to the Bills many years ago.
Did you ever know that? Did you know that Marv Levy married his assistant's wife?
Did not know that.
Did you know that? Marv Levy has this like guy that follows him around. That's like his like. You know, he's his like this guy is his entourage, let's just say. And Marv Levy married his wife.
Where did you get that little factoid from?
From the guy.
He stole his wife, or?
No, I mean, he's like, yeah, me and my ex-wife, we got a divorce. 5 years later, Marv Levy marries her.
Well, that Marv Levy is a sexy man. If a woman's going to leave you for anyone, you know. You always tell your wife, you keep your wife close when Marv Levy's around. We'll just say that.
Oh, yeah, no kidding. No kidding. That man is a dangerous
sexy man.
Mm-hmm.
We'll be doing those Extends commercials next. You watch.
Oh, my Lord.
All right. And with that horrible diversion, we will get right into Around the Block. A lot of interesting things on the horizon. Of course, FOMC meeting tomorrow, so a lot of eyes will be on that. Quick update on VMW. Looks like they've come off a little bit after maybe a little bit of a bullish bounce and now trading in the low 87s range. So pretty much unchanged. So it looks like the news wasn't too powerful either way. They're kind of hovering around unched in the after hours. So nothing huge right now, at least coming out of VMware for their earnings. And I know, what do we have here? I believe.
Yeah, you got a big calendar this week. You got FOMC rate decision, I'm guessing unchanged. GDP on Friday. I'm most interested in the crude inventories that we're going to have on Wednesday. If you've seen crude as of late, down again today, broke some moving averages. Politicians, talking heads start complaining about high gas prices. Lo and behold, last week inventories are higher and prices have sold off. So I'll be interested in watching that to see if those inventories remain high. And if we can, it looks like oil technically is ready to sell off a little bit and at least test that 85 area. So I'll be watching the crude on Wednesday. But yeah, full economic calendar this week.
I'm guessing your day is going to be pretty busy on the 26th because that's when Netflix reports their earnings, and it seems like the OX customers are disproportionately interested in trading Netflix these days.
Yeah, if an option has a weekly, and Netflix does, I mean, it seems like our customers are trading those. I mean, Apple, Netflix, GLD, Baidu, anything that's got a weekly just seems to be a day trader or a swing trader's dream or a premium writer. People love to buy those long-dated options and sell those weeklies against them. But no, I'll be watching Netflix. Apple's. I know you guys have talked about it last show, but that seems to be the one I'm getting calls on. 2 out of every 5 calls, people are still talking about Apple. Up almost $9 today. I mean, how can you not be interested in something that has that type of move? In 3 days, it sold off $25 at least.
Yeah, it's up.
Yeah, I mean, it was crazy.
Yeah, I think it peaked at 357 after earnings.
Yeah, I mean,
that
was
the market, but.
So Tucson,
yeah.
you legging back into some verticals there, or are you done with Apple for the time being?
Done with Apple in the short term. I mean, we still have some Apple collars going. For the most part, done with Apple for the.
All right, can I brag real quick? I know you'd be shocked by this, but I want to brag about something. So I was looking at Google when it was at like 6:30ish, and kind of watching how it compared to Apple. And I said, this thing may have another drop in it. So then I wrote for TheStreet.com that they should buy the 625 puts and sell the 610 puts. And then literally that afternoon, 2 hours later, the thing drops $15. Brilliant. I am that smart. And by that I mean blind luck.
So you forced Eric Schmidt out the door then? That was you?
That was me. So I don't know if you know this, but
we talked about tech. How do we forget the biggest story of the past week, that Google's CEO mysteriously shown the door or taking a back seat, it seems, to allow the founder to return. That always works out so well.
Yeah, I like the quote he had, though. I mean, they ran that as a try CEO group, and he said, the kids are grown up or something like that. I mean, they're pretty much running it. That's why I didn't think we'd see a big move at all, but Sebastian proved us wrong, I guess.
That's what I'm known for, is my me proving people wrong.
Seems to be.
They said I couldn't do it, but I can.
Seems to be there was a lot of pushback, I guess, going back and forth between the founders and the CEO over that whole China thing. Starting to fray that relationship last year after the whole pulling out of China. The CEO wanted to stay. The founders wanted to be true to their mantra of do no evil and pull out, and that seemed things started going downhill from there. The guy wanted to run it as a business. They wanted to run it as with their do no evil mantra. And so those two things tend to go head to head sometimes. So not surprisingly. Oh, good.
Do you see Google's going off after Groupon? They announced today they're making something called Google Offers.
Yeah. Like, how bad do those guys feel now? I mean, they raised a ton of cash. I mean, they're doing well. But on the flip side, they turned down an offer, and now they have to, not only do they not get the money, but they have to compete with Google.
Yeah, I think Google just wants to, say, hey, nobody says no to us, kind of like, mobster.
That can't be a welcome development for those guys. I mean, obviously they have a lot more local expertise than Google does, which is why Google wanted to buy them. But with the billions of dollars Google can throw around, they can acquire that expertise relatively quickly. But yeah, one thing I did want to throw in there before we left is I know we've talked a lot about RDN on the show in the past, and Mark, have you been watching this one? The thing has just fallen out of bed over the past week or so. It was RDN. It was pushing north of getting close to $10 again, and now it's just down at $7.70. Really, all those people buying those 9 and 10 calls in Feb, I guess they were a little too optimistic.
Yeah, no kidding. So that's interesting. I just think that they build it up and then they kill it. This is kind of what one of the dangers is in trading these cheap stocks, is that you can really get slammed home pretty good.
Yeah, that guy who bought 15,000 of the Jan 9s, I guess he felt he had enough, and now he's dumping all the stock and just unleashing it back on the people who bought it after.
Yeah, I mean, that's the whole thing, is buy, build. It's like it's your classic pump and dump. Okay, get guys like you and get jamokes like you and me talking about it, get us all excited, and then kill the stock. But then again, you and I have been kind of talking about the fact that this is what we were kind of expecting, right?
Yeah, that's what I was thinking. Whenever you have one sizable player kicking things off like that, you always kind of have to wonder what he's going to do once his bet pays out.
Mm-hmm. He's going to kill it.
Speaking of pump and dumps, really quick, did you hear, I think it was a couple of weeks ago, that I think it was 50 Cent, or as the kids call him, 50 Cent. He talked up some stock, some penny stock he had millions of shares of on Twitter, and the thing rallied like 87%. And the guy made some ridiculous number, like 8,000%. The guy made like $8 million in valuation off one day, off of one tweet. It seemed like a classic pump and dump to me. I'm not sure why it isn't, but yeah, he talked it up on Twitter, and now he's doing all right.
Yeah, it's funny.
Not a bad story to close us out on. Well, that's going to do it for the Around the Block segment, and that's also going to do it for this episode of the Option Block. I want to thank all of my cohorts for coming on today. Starting with you, Mr. John Grigas, what is going on? I know you guys will be busy ringing a lot of bells this week. Anything else?
Look for us on CNBC SIBO on Friday.
And then Uncle Mike Tusaw, how are you doing over there? How did those custom webinars, how are they going? Anything interesting?
Oh, yeah, just definitely people are calling in, and we're excited about it. So,
did you get any really unique or interesting requests?
No, nothing too unique, actually. Nothing too unique. Just it turned into just people calling, and nothing too unique, not at all. So the most unique one that I ever had was a gentleman wanted to learn everything you could possibly know about trading natural gas futures and natural gas options, and just everything natural gas. So it was quite the learning experience for me, and now he's going to be a client shortly, actually, in pretty due time. So it was a pretty exciting thing.
So it all worked out well in the end. See that, kids? You do your homework, and it'll pay off for you, too. And
say no to drugs.
Yeah, say no to drugs. And maybe you should do a webinar one of these days on fishing for salmon with your bare hands. That might be an interesting one as well.
I'll tell you what, I have a picture of me holding a salmon that I caught in Alaska sometime. I'll have to email you guys. It was the most exciting fishing experience of my life.
That'll be your Skype.
Well, isn't that kind of like an annual thing where you stand by the river as the salmon come back and catch them as they're popping up over the waterfall in your mouth?
No, I used a pole and I was on a boat, actually.
Oh, okay. I just assumed it was you and your other large brown bears that would be hanging up by the river.
And Mr. Sebastian, what is going on over at OptionPit.com these days?
You know, our special L2 prep course starts basically as you're listening to this. We started. If you want to catch up, you can still join because we record everything, so you can kind of catch after the fact. I'll be happy to catch you up on any questions. And obviously we have that special code, and we've actually had a lot of users from the Option Insider sign up, and I want to quickly thank all of our listeners for supporting us. And we've seen a lot of that OI 2011 sign up, and people telling me how much they like the podcast. So, obviously we appreciate any of your business, and we appreciate more that you listen to the likes of me and Mark and Mike and John Grigas blather on for what is at least an hour every twice a week. So
an hour minimum.
Yeah.
I'm glad you got a lot of turnout from that. I'm glad that our listeners responded. Good. I'm glad.
Mm-hmm.
All right, and of course, as usual, if you want to hear any more about the unusual activity or some of the breaking news or anything else we discussed that pertains to the options market on the show, you can find it all on theoptionsinsider.com. And I want to thank all of our listeners for tuning in and subscribing and downloading and streaming the show, as well as for signing up for Uncle Mike's webinars and for Crazy Mark Sebastian Greasy Meatballs webinars as well. And we'll see you next time on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.